Hey guys, thank you for joining. Welcome back to the bootcamp and happy holidays and Merry Christmas for everyone. I do appreciate everyone who joined. Obviously, not everyone is here because some students are spending Christmas time. It's totally fine, of course, understandable. The reason why I had to delay or had to change the schedule from the Monday meeting because obviously we were supposed to have our meeting on Monday was because it was brought to my attention that our student portal had sort of a security issue and I had to get that fixed. Unfortunately, some students of the program managed to exploit that security issue. It is what it is. I didn't notice it in time, but luckily there wasn't any major damage done. So that took some time to fix it, but now that it's fixed, the meetings will continue. And of course, at this time, nothing is really happening in the market. The market is mostly closed. If you take a look at the economic calendar all the way from last Saturday, this is how the economic calendar is looking. We basically have this entire week as bank holiday, obviously the Christmas days. Friday, again, nothing is going to be happening here. After that, once again, we have the weekend. Also, we have Monday. Once again, next week, starting off with bank holiday, then we got the New Year. Thursday, one unemployment claim news, but it's not really worth actually focusing on it because it's just not worth the efforts of even checking the markets because simply it's not going to be moving how it should be moving. So for that reason, this time of the year is pretty much the only time of the year aside of August when as a trader you're not trading. Today we're gonna go into some pretty important topics. Going to continue the discussion regarding the entries. We have discussed the order blocks on the past lesson, and now we're gonna continue discussing that in further details. And additionally, we are going to be adding more concepts into it of how it works, what it is, and how to use it in what situation in the market. But before we move forward, unfortunately, because the program has some students with not the best intentions. It's really unfortunate, but it is what it is. Some students are working on content piracy. Obviously, this was discussed already by me early on because I'm completely aware that this is done and some people just join and are part of it with this intention. Maybe this is what makes them feel was the right thing to do, I guess. But for that reason, to better protect everything, we have to complete a KYC. Of course, I did mention this earlier, but I haven't moved forward with it. So we just haven't done anything with it. I have checked the best ways we could do KYC. What does KYC mean? Is basically an identity verification that probably most of you have already done once in your lifetime with trading. Maybe you have signed up somewhere to trade, maybe on a crypto exchange, maybe on a forex broker. They probably ask for some ID documentation, so that's also what we are going to do here. I have looked into of how could I possibly make sure that everyone's comfortable with the KYC and no one's actually having any concerns that I would be exploiting any sort of personal information. Some services did offer the ID verification in terms of automation. However, the problem with that, it didn't really provide any sort of difference other than manual verification. So I won't be using third-party providers because in that case, when third-party providers are involved, you gotta pass your information to third parties, and then it's also just more expensive because it costs like, I believe, $5 to $10 to verify everybody. So it's just an unnecessary cost. So what we're gonna do, and what I suggest, and at this point, it would be best to do it for everyone. If obviously someone is not doing it, then I gotta question your intention with the program. So the email you gotta send it to will be this. All you gotta do is basically send your identity verification that is matching with your customer name. And that's really the most important thing here, to make sure that it's matching with the customer name. Obviously, if someone has paid with different customer name, that maybe you used a payment method that was not under your name, it's not an issue. In that case, you gotta verify yourself, so it wouldn't cause any issues. So what you gotta send here is basically a selfie holding your ID and the front of the ID. You do not have to send it back, because if you send the back of the ID, it gives too many details of the ID card itself. So the front of the ID is totally fine. Not important to send it back, but if anybody wants to, it really doesn't make any difference in my opinion. So front of ID. That's what you gotta send. In terms of how this data will be handled, I want to assure everyone that this data is not going to be given out to anybody else, aside of just me making sure that your name is matching with who you are. And that's how the data will be handled. And once it's verified, I will be deleting all of the images and all of the content that you have sent me. So I'm not going to hold it to myself, because I just have no reason to save this sort of information. I just want to make sure that everybody who's part of it, who's part of the program, is a legitimate person and not having any intentions to pirate the content. Because again, if someone is against this, I gotta question that maybe you're someone who's trying to pirate the content. So that's what we're gonna do. I hope this is understandable. And this is only done because I have come across and already confirmed that I'm already suspicious of who it might be, but I cannot already exactly tell like that person is who's actually trying to pirate the content, because I still need more evidence, but I'm already suspicious at a couple of individuals who might be it. So it is what it is. That's what we're gonna do. But without wasting any time, please, once you have done that, the lessons will continue for you too. So basically, until you do not complete the KYC, um, basically the program shall be, on pause for you. This is really reasonable in my opinion. Another thing that, okay, so that's something I will rather tell at the end of this meeting, because I want to move forward with the topic. So again, going back to the lesson and putting all of this other off-topic information to the side, we have started discussing the order blocks, which was the entry concept. Just as a reminder, let me go ahead and pull up the example of what we have discussed, and we are going to be going into further details of how to use it and what to do on the order block concepts. I'm gonna share my screen again in a second. Okay, so this is what we have discussed. Just a second. Apologies for stopping. Gonna continue in a second. Okay, so we can continue. So again, this was the order block of how it works, what it is. It covers all of the important aspects of what the order block is, but let's move forward with the order blocks because we have a couple of different versions of this. And in those versions, we're gonna cover how to use them. Okay, so that's the order block itself in terms of what it is, how it looks like. And this candle itself has this variation in itself, which is technically just the market coming back to this order block area. And as long as the market is coming back to this area, it is, of course, going to be your interest to execute a trade from this level and then get involved in the market here. But in some cases, obviously, some of these order blocks will not be working. They would be failing, so the market would be cutting through this order block area. Pretty similar concepts to how sometimes supply and demand concepts would cover the use case of this. However, we have some major differences in terms of the systematic rules of how we are going to use it. So the thing is that whenever it comes to a concept in the market, it's the thing that matters is making it as systematic as possible, and as long as you're using it with a systematic way. And that is why it's important to not sort of mm, to not change it up with other concepts like supply and demand, which if some people have learned it previously from somewhere, then it's important to not mix up the two because the rules to the concepts might be different. And if you're mixing things up with one concept with another concept, then it would make things difficult for you because in that case, you're unable to follow a systematic approach in the market in terms of how to use your concept and when to use it. So when it comes to order block, of course, once again, like I said, it's similar to supply and demand. However, here the difference is is something I'm gonna tell later, but the thing that you gotta know, and the thing that I wanna explain in this other example is once this area is respected, that's a trade you can execute. We know that. But in some cases, this area won't be respected, so the market is going to be cutting through this area, and in that case, your trade would be failing here, and you simply fail on the trade because the market is not respecting this level and you hit the stop loss on the trade. But in most cases, the thing is that when such order block would be failing in the market, it's not a complete it's not a complete stop out in a market in terms of not being able to further capitalize on a movement. It's a lot of times the order block turning sort of from a support level into a resistance level and then turning upside down, which is called the breaker block. Of course, those who have been previously involved with these concepts, they know what I mean, but those who haven't been involved with these concepts, here is some context of what this means. And what I'm trying to explain here is when the market is creating a support and resistance level, what that means is if a certain level has been seen as support, so in terms of giving a rejection for the market, if the same level is not working as a support level next time, it's rather cutting through this support level. So this black line would be the support level, is cutting through it. The next time, if it's cutting through this level, the next time if it's coming back here, is going to be turning from the previous support level into a resistance level, and then the same black line will be giving you a selling trade because it's simply the support resistance area in the market. Because first, this might have been rejecting the price to the upside. But once again, if it's cutting it through, it's turning into the resistance level. So again, the next time it's coming back, it's rejecting from it. And this could be going on and on. So if it's cutting through again and coming back to it, it's turning from the resistance to the support. And then this pretty much repeats over and over again in the market. And this is called support resistance in terms of what price action is doing. So when we go back to the order blocks, when we go back here, what we are seeing is basically a support level in the market because we obviously mark up this area of the black candle as a support level because we simply expect the market to be moving further higher once it's coming back here. And the reason why we expect this level to be respecting this area because this is building a support level. But once again, like I said, if the support level is breaking through, it's also turning upside down. So in that case, if it's coming back to the same area, in that case, you're going to be seeing a rejection from this area back downwards if it's coming back to it. So once again, it's working according to the same concept of what support resistance is. Just this here is going to be a much more accurate representation of where your entry can be executed in the price and in the market. So that's what the next concept will be for us. And So this is what this concept is basically an order block that is getting cut through by the market and then coming back to it and then turning into from the support to the resistance level. We're gonna call this the breaker block. Of course, those who are completely new to the concept, this does give sort of a background to it of what this means and how what's the logic behind it. But those who are already familiar at some level, at least you also got some further information. So how are we going to be using all the blocks that are basically failing? What are the rules that we are going to be putting on it that's going to be helping us identify this concept in the market? So the first thing is, as we have also been learning, let me just duplicate this. So as we also been learning, let's see how can I delete it. Okay. So as we have been also taking a look at the old block, the main concept here is an impulsive move to the upside that is going to be validating the previously oppositely closing candle. And what happens is when the market starts moving away here, and when it also goes back below it, the way you're going to be validating if this order block is no longer valid for a buying trade, is rather turning into a selling trade, is the same way as we have seen the impulse move here. In this case, we are going to be considering an impulse move back down through it. And as long as an impulse move in the market is happening back down through this zone again, it is validating this area from an order block now turning into a breaker block. So in that case, we are going to be interested in selling the market because simply this area has been cut through by this massive impulse move to the downside once again, and turning the concept into the selling perspective. So that's what's going to be helping us validate it. It's simply a new impulse move cutting through the same level back down, and once it closes below it, it's going to immediately validate the entry. And once again, like I have said on the order block, once this impulse move is happening, you gotta be prepared for the entry immediately on the next candle. The same thing goes with the breaker block, is you gotta be prepared for the entry immediately right after the next candle. So once this black candle is closing below it, you're pretty much immediately validating this area as the breaker block in this case, and then you're already interested in selling the market downwards. So this is what the concept is, and what's going to be helping you validate if the order block is turning into from the support to the resistance, in other words, turning into a breaker block, this impulsive candle back below it. So let's illustrate it and let's cover some further important information regarding this. Until I'm illustrating again, feel free to ask. Unless you were accidentally raising your hand.
No, mate, I got you.
Hello.
Hello?
Hello. Yes.
Hi. Can I ask my question?
Yes, absolutely.
Yeah, this is regarding the breaker block. Once the impulse move goes down, does it have to be twice the size of the breaker block, or does it just have to close below the breaker block?
That's such an excellent question. So right now, what I'm trying to illustrate, we're gonna take a look at some of the important rules. So in this case, the impulse move that actually has to be closing below it, so this has to, having to close back down below it. This hasn't, this doesn't have to be any sort of size. This can even close even one single pip below it, and it immediately confirms the breaker block. The size in this case would not matter.
Okay, sure. So just for the order block, it has to be twice the size minimum for the
Yes.
order block.
Yes, this one has to be twice the size, the order block. But when we are turning from order block to the breaker block, the impulse move back down, it doesn't have to be any specific size as long as the body itself is closing. So, like, not the wick. Like, let me show you here. So it wouldn't be just the wick like that. As long as the body is closed below it, even if it's just a tiny bit, it's immediately validated. And then you're already interested in selling, and you pretty much immediately place your sell limit here, and you're taking action on the trade.
Okay, sure. Thank you so much.
My pleasure. Hayden, what about you? Did you have any sort of questions?
Yeah, mate. Can you hear
Yes, I do.
me? Yeah, so just with my question's a little bit different just based on what you were saying at the start of the lesson. Because the markets are like closed for the next couple of weeks, will we be watching you doing any live trading at all because the markets aren't really
We gotta
performing?
do it. We gotta do it after the market opens. So obviously, you guys do not have to be concerned that after the 6 weeks you guys are not getting any further lessons. We gotta be doing it after the market is open again.
What do you assume mean after the 6 weeks we're going to be like that's
So
done?
what
But
I'm so obviously, okay, so let me explain this before I move forward with the illustrations. So obviously the product itself of the mentorship was sold and advertised as 6 week mentorship program, as also it was
mm,
described in the contract. So what I'm saying is you do not have to worry that after the 6 week you're not going to get access to it. So because at this period the market is pretty much closed and it's hard to actually get any sort of live market analysis at this time. We just gotta do it after the market is open, and obviously, if that's after the 6 weeks, we will just continue doing those lessons with live market analysis,
okay, so this could go for 8 weeks.
or even more.
Okay, all right. I just wanted to make sure because yeah, that was like a really big part of me wanting to
Yes,
watch, just see how you trade and execute and stuff like
it,
that.
it, it is an important part because that's the only way I'm properly able to actually show you how things work in the market. Because if I'm only showing things in hindsight, like how do you actually see it in live? And that was also so important with my one-on-one students from 2024 is we learned a lot together in hindsight, and we did a lot of lessons, and then we also started doing a couple of live market sessions. And when we did that, we got a couple of good entries in terms of how things work and the entire breakdown step by step. And that's something I believe is a major part of the learning process because it helps you better understand of what is happening in the markets live. So yeah, absolutely, I wouldn't leave it just by not doing it. I have to do it. It's something I must do to properly teach you how these things work.
Yeah, all right, mate. Thanks for confirming that. I really appreciate it.
Absolutely. So let me just continue this illustration here. Might take a couple minutes. Just I want to make sure the illustration is correct, and then we can continue with some of the rules and some of the important confirmations of what would be making a break block. Thanks for the patience until I'm doing this, of course. Of course, here we first see the concept itself as an order block in the first place. Then the order block is going to be failing, so it's a failing order block. The market is moving through it. So in that case, it's once again turning to the breaker. And the number one confirmation that you're going to be making is making sure that you see that this breaker block movement is going through with a strong impulsive move to the upside. If you do not have the strong impulsive move, the breaker block cannot be confirmed on this area here because otherwise it's just not valid. If the move is going to be these tiny small candles like this, the breaker block just cannot be confirmed in any regard. You just cannot confirm it. It's impossible because it will not be working. You have to get the large impulsive candle in the market breaking through this area. And once this impulsive move breaking through it has been happening, that's when you can confirm this level as the breaker block. And once you confirm this level as the breaker block, immediately, once this impulsive candle is closed, you're immediately validating it, no further validation is needed, and then you're already interested in executing the trade here. So that's confirmation for the breaker block. Pretty simple concept and pretty simple systematic rule to how you're going to be confirming it. Let's move forward and see the other confirmation. The other confirmation is confirming the breaker block when the market is not going to be breaking through this area with a large impulsive move. So in some cases, the market is not going to be breaking it through with an impulsive move. Sometimes it's going to create these smaller candles and it just gradually climbing upward and it's never actually creating any sort of impulsive move. When this is happening, the only way you can confirm this breaker block area is by having a second order block aligning with the breaker block itself. So that means this area was the previous order block that was broken through, but within the same area, you must be having a second order block here, like that. And that's the only way you're capable of actually confirming that the breaker block was that the breaker block is valid, because in this case you also got the order block, and this is sort of a double confirmation because the order block and also the breaker block is aligning with the same area and you're double confirming the same level, and here you can ignore the importance of the impulsive move as long as you got another order block here. That's the only way you can validate it. Okay, so that's how this part is working. Another illustration is using the time frame to validate it. So let's duplicate this. Let's move this to the side. And let me try to illustrate it the best way. It won't be easy to illustrate, but I will do my best. And let me also add some I'm not adding comments because I want this to only make sense if someone is watching the recording, and if someone is just taking a screenshot, I wouldn't want it to make that much sense. So next illustration is, let's say that this here is a different time frame. Once again, thanks for the patience until I'm doing all of these illustrations. I'm not really the person to pre-record all of these illustrations. I'm doing it every time live. It's just more comfortable for me. So let's say in this other example, this time frame would be the 50-minute, the red and the blue time frame. So this is what you might be seeing on the 50-minute. However, on the 1 hour time frame, you're going to see something like this. Okay, so try to imagine this here. The blue color is the 50-minute time frame. This is what I see. It's a lower time frame 50-minute order block first, then it's sort of turning into the breaker block. Again, it's all on the 50-minute. I have this area on the 50-minute, but the only thing is all of these candles moving to the upside, they are not going to be one single impulsive move. But if I would be switching to the 1 hour time frame, what I'm going to be noticing is on the H1 time frame, all I see is two big candles, one oppositely moving candle and one massive impulsive move that is creating a 1 hour time frame order block. And in this case, you're ignoring the lower time frame breaker block, or sort of not ignoring, like this confirms it that on the lower time frame this was a breaker block, because on the 1 hour you got the higher time frame perspective of this formation, and in this case you would be using this higher time frame area, and this area would be confirming your 1 hour order block entry plus the 50-minute breaker block. So again, you got double confirmation, order block plus the breaker block at the same area. So this is when you're using multiple or two, three different time frames to confirm this concept. I hope this makes sense, because some people get confused here, but it's simply switching onto a different time frame and seeing the time frame breaker block at the same area as we got here. And I get so many trades this way. It's just, I could just completely trade according to this. It's so consistent. So this is really the three different ways and three type of validations to what and how an order block would be turning into a breaker block concept. So I hope this is understandable so far. Maybe I should let a couple of questions in, because the questions are pretty useful a lot of times, because it sort of leads to a complete different rabbit hole of answers that I previously would have never explained. So obviously gonna go in order in terms of who raised their hand first. So hi guys.
Hello, Daniel. Can you hear me?
Yes, I can.
Okay, perfect. So I just want to ask you, if we go through the order block, but not just one impulsive candle, just two impulsive candles, does still consider that as a breaker block? For example, if one candle rejected from the order block and the other one just went straight through it, does it still consider as a breaker block?
Like this?
Yes.
No, that's not.
Okay. Thank you.
That's inconsistent. It wouldn't be working properly. I never seen a single trade work with that. Unless you got other confirmation like order block or maybe when the market is coming back here, it's exactly in the clear zone time. Yes, potentially it could be working, but no, normally it wouldn't be working. It's not.
And also, how do we place our stop loss? According to the order block size, or do we cover the low? Okay.
10 pips.
Thank you.
Yeah, you put it here. If it's more than 10 pips, you're gonna put it here like that. If it's less than 10 pips, you're gonna make it 10 pips, and wherever the 10 pips is, that's what you're gonna use, because we never use less than 10 pips stop loss
Okay. Thank you.
for sure. Okay. Anybody else who had questions?
Hello, Daniel.
Yes, Eric, how are you?
Fine. How are you?
I'm good, thank you.
I wanted to ask, what if in 15 minutes time frame we have an order block, and in 1 hour time frame there is no order block?
If so, like, do you mean this one?
Yeah, but just the opposite.
I never seen it oppositely. Yeah, it never happens oppositely because mostly the one with the more candles is the lower time frame. It never happens oppositely.
Okay, thank you.
So most all of the times the higher time frame will be the bigger one, right? So the higher time frame will be the bigger confirmation, and obviously the illustration in the blue color, it's always the lower time frame. It's never the other way around. So do not even confuse yourself with that. So thanks for asking it. I'm pretty sure others also had the same question. Hello, Marion.
Hi, Daniel. I was just wondering, you illustrate here, like, let me say, 3 or 4 candles on the 1 hour time frame. Yes?
This one?
No, on the right side. Where is the breaker block? If those candles happens in New York time, London time, like it makes it a high probability.
The time, it doesn't matter in this case. So the
Okay.
time that this is cutting through,
Mhm.
it wouldn't make any difference.
Okay.
The time of the entry is what matters. So the
Yes.
time of the entry has to be in New York time or London time or potentially Asia time. It always has to be a session, but
Oh,
the time when this is cutting through, it just doesn't matter anything
okay. Thank you.
for sure. Okay, so I guess those were some pretty nice questions. Parker, I see you've been raising your hand next.
Yes, Daniel. Can you hear me?
Yes, I can.
Okay, fantastic. So with regards to our entry being in the order block or the breaker block, do we want the candle to push into it a certain amount before we enter? Like, for example, 50% of the way?
No, absolutely not. As soon as the market is reaching the top side here, you're immediately executing the trade. Who, like anybody who ever said to anyone to enter on the 50% or anything, I tested it and I tried it myself. Like, there's no logic behind it. Like, why would you want to give yourself less chance to enter the market? I'm a big preacher of making sure your entry is taken as early as possible to rather get into that trade instead of missing it. So you will always take it on the top and not risk it on missing it.
Okay, so immediately upon entry. Okay, thank you so much for that clarification.
Absolutely. Nice question, to be honest. Okay, guys, so pretty nice questions. It's always good to have a couple of questions, even though um, I could just go on with the lesson. The thing is, questions sometimes give answers to certain things that I previously might have not thought of explaining. So thank you guys for asking. Without wasting any further time with these illustrations here, let's go ahead and take a look at the real charts. And I try to show the real charts, like in the next 20 minutes or 30 minutes. But let's save this to the side. I'm going to also save it. So I'm gonna publish it. Okay. Brian, thank you for sending me a message privately. So the question was, how do you guys access these published charts? Obviously, it's private. So what I'm going to do after the lesson, I'm going to send the link to you guys, and you guys can also view the link, and also you guys can copy the template and save it for yourself. I hope that helps. So let's continue real chart examples. Pretty exciting topic in my opinion, because interestingly, so many entries are just happening with these sort of three different breaker blocks. It's truly so consistent that it's pretty much only almost the only thing I'm looking at in the chart. Almost. Okay, so let's go to the real chart and gonna first try to show the ones that are actually clean and actually obviously easily understandable. Wouldn't want to confuse you guys with any sort of overcomplication. Okay, so let's start here. And then we're gonna look at other examples. The reason why I'm gonna start here because I just seen it and we didn't want to further waste time without showing examples. Here, I can do this now because I got the paid version. But other than that, do not buy the paid version of TradingView. It's a waste of money. So this here was obviously first seen as a breaker block, excuse me, order block, because we had the impulsive move, not particularly twice the size here. It's pretty much the reason why later the order block failed, because the impulsive move is not actually exactly twice the size, or not even closely twice the size, and also this wick is falling back, which was pretty much just a sweep of these highs. So the whole intention of this candle wasn't really showing any sort of good order block intention, because simply the candle itself already started falling backwards. So it's no wonder for me that here it obviously broke through, and later the big impulse candle in the market turned this initial order block looking candle into the breaker block, because in this case, now that here we have the massive impulsive candle breaking it, it's immediately turning into the breaker block. Another thing to note, and another thing to notice here is the bottom side of this area is the entry. Again, you're not interested at any sort of 50% area. It's absolutely not something that you gotta consider. It's so the 50% is not something you gotta consider. You're immediately placing your entry here, right after the impulsive move is happening. At this point, no further confirmation is needed because the breaker block itself is completely validated in the market. So stop loss is placed on the top, and your risk reward one to one. Just kidding. Use at least 1 to 2. Here, the entry, if the entry is happening immediately right after it, you can take the trade. However, if it's happening later, it's still valid until it's coming back to it. Obviously, here the market came back much later, but it's not an issue. The thing that this actually signifies is the area itself is indeed becoming an area of support resistance level in the market, and it is going to be giving a sensitive point in the price where you're going to see a good trade like that. So it's obviously giving the rejection. I think this later just went back up. Maybe some fundamental events, doesn't even matter at this point. The illustration and the example itself is purely meant to illustrate what the breaker block is and how it actually becomes a breaker block in the market with systematic concepts. Obviously, who cares? It's a stop loss. It was a good illustration of the breaker block. So let's move forward and see some other illustrations. And regarding the risk reward, actually, you can use 1 to 1. It's not an issue. And most of my trades are just 1 to 1 because it's the most consistent. Not easy to find the cleanest examples at this time. I want to show the best and the cleanest examples because otherwise it will not be giving the best understanding because you might be getting confused. And another thing regarding the paid TradingView package, do not pay for TradingView. It's not important. The only reason why I paid for it because it was kind of getting annoying that the ads were popping up, and I didn't want them to interrupt the meetings. But I'm not using any of the functions from the paid version. Okay, gonna probably go to a different currency pair or maybe a different time frame because it's just pretty hard to find the cleanest examples here, at least for this past month, because all of the other examples that I see immediately are ones that need far more confirmation than just the breaker block itself. So again, it will be just a complete mess and complete confusion for everybody if you're not seeing the best examples when you're learning about it. I'm gonna mark this up, but I'm gonna come back here later because I wanna put some more explanation here. See, like this is what I mean. Obviously, it happens so many times, but again, this one not the cleanest example to start with because the candle went lower. Then this wasn't just break block; it was also optimal trade entry. Plus, it was other timing confirmation uh, with the time on the bottom you might be seeing there. So again, too much context needed here because I like to go step by step with my teachings. If I just dump a bunch of information at once, it will be too painful to process. Okay, so I'm gonna stop looking for further examples because here I'm just pretty much wasting time at this point. So let's take a look at this one here. Once again, just randomly seeing it. Here, once again, same concept that is followed. You're basically confirming the initial area of the order block. So if you take a look at this candle here, this first was an order block actually because it was a bullish impulse move to the upside, and then the bullish impulse move from the upside basically failed. Obviously, why did it fail? Because of course, like this wasn't the cleanest oppositely closing candle, so it has the reason why it's failing. But if it's failing, it's actually giving you an opportunity to the other side because the stopwatch is turning into the resistance. So what happens here is this black candle's area is going to be marked up here, and once the market is coming back to it, at that point you're going to be getting your entry easily and consistently with this system. Easy 1 to 1, easy 1 to 2, like that. Going back with this what I have marked up. Same concept here, a bit different example, but actually it's the same idea behind it. Is basically the market here is getting the obviously first we sweep these equal lows. What happens when we take the equal lows? The market is reversing already, so we understand it. Here, this was the order block first because we had this impulsive candle to the downside. This was the previously oppositely candle before the big impulsive move. So obviously it was the order block at one point, and once this candle was breaking through, here it's once again going to cut it with the impulsive move. And in this case, I think Alexander was asking this sort of question. Is this sort of movement valid? Yes, in this case, it will still be valid because the impulse move that is cutting through it is far more impulsive compared to this candle here. That one, so this candle is ignored and the impulse move is this one. So I hope this kind of shows a good example of that. And what happens immediately, the next candle, so that's what I have said. You're not waiting for any other confirmation at this point. Once the impulse move candle has been closing, the next candle's wick is potentially already moving back to this level, and then you're already interested in this entry. So here, that's your entry. Is this a stop loss? It's not a stop loss because here in this case, a lot of other things were used, like the optimal trade entry from that point, and that's of course making you put the stop loss here in the bottom, and it is just a different rule. But again, this is something I'm going to explain in the next lesson because otherwise it would be too much. So here the stop loss was placed lower, but anyway, the main concepts illustration is there, and it shows that immediately the next candle is tapping right back into the break block, and you're immediately taking action on the trade, and you're not waiting for anything else because once the impulsive candle is closed, the entry is validated. Same thing here. This was the previous order block. It breaks down with a big impulsive candle, and this here becomes your entry. What happened? I'm not even sure. It's too far. Yeah, kind of just missed it. It is what it is. But it does again illustrate the idea of the concept. Same concept here. Once again, we have the previously seen order block in the market at this point. That's the order block because this was the impulsive move. Then we have the other impulsive move moving against it. And once this is confirmed, the market is coming back, and that's your entry. And obviously, it's working and it's going down. The only important part here that you guys should not be forgetting is the entry is immediately verified and is immediately confirmed after the downward impulsive move has happened. As soon as that is happening, you're taking the entry because the order block turning into breaker block area is fully confirmed in that regard. Okay, so that was an hour-long lesson on what the breaker block is and how to use it. Okay, guys, maybe I shall end the meeting here. So guys, thanks for the attention. Please make sure to upload or send me the KYC that I have requested. The email address is mentor@ and my domain name, you guys know, so it's mentor@. And another thing, let's go here and take a look at this here, the Trustpilot. I would really appreciate if you guys would go ahead and flag this review. I was in communication with this person. Pretty long story. Basically tries to cause some damage with adding a one-star review. So I would really appreciate if you guys just go ahead and flag it as harmful and defamatory comment. So it's really a minor thing that I can ask you guys, but it's a major help for me because I wouldn't want to get my reputation harmed because of a few dickheads. So guys, thanks for the lesson. Thanks for everybody's attention. I do appreciate that everybody stayed until the end. And if anybody has any questions regarding this meeting, just make sure to send me a message on Telegram. Bye-bye.